Hello everyone. Wanted to go over the spreadsheet tonight before we go over the final run at 11 p.m. Central Time. It is now the 9th of March, and I wanted to kind of go over the spreadsheet to show reason for being able to close out a trade with the break-even plus dinner for two. And I think it's important to show how powerful that protection is when we use ruthless risk management. Quickly, this is a standard lot for a Forex trade, so we have 100,000 units when we trade the Forex, and the margin that's required for, in this case, for the Aussie dollar and the Canadian dollar is approximately $2,000. And we have the many lots here. You would move the decimal point one over for the margin required for that particular trade. And the micro lots, you would move that over 2 decimal places. As I had said in previous videos, you might have noticed that this number is significantly less. What I had done is with the break-even plus dinner for two, this was the stop that I had before those major swings the previous night, and it shows how powerful it is to protect your profit. It is significant. Now we set targets utilizing those graphic moving averages and also Bollinger Bands, but they're also great places for stops. When you're contemplating how much risk you want to take with this trade, the quickest and most viable path to profit is making sure that you protect your profit. Now, when I sent up this spreadsheet for Sunday, it was at approximately $38,000. I still have those hard losses that I had last week. They're still logged in our diary, and we haven't got into any new trades at this particular point, and they're all highlighted in red. And the green is hard gains, right? So what we have here is that swing came crashing back down with the oil fight between Russia and Saudi Arabia, and also the coronavirus, and we had huge volatility within the currency markets. But this shows how important those stops are. The other thing too is that in gold here, we still have highlighted, which means that we're still in the trade. So whether that be long or short, we're still in that trade, and we have protective stops along the way to make sure that we lock in profit. And these are the current prices as of 10:42 p.m. on the 9th of March. We need to understand is that when we log these trades and they go hard green or hard red before we open up another trade, make sure that our protective stops that are in trade are set at a break-even plus dinner for two. That's how powerful Ken Long's method is, and I think that's significant to show graphically in terms of profit and losses. Also, what it allows us to do is let the runners run. And so with these, we're continuing to move down the protective stops, in this case for the shorts, the belly of the dragon, or on the longs, we use the hump of the dragon. As you can see here, it shows in just one day, happening at once, an increase of $2,000. So this shows strategy in this system helps us gauge and maximize our profits, plus minimizes our risk through ruthless risk management. This is Ken Long's system. So I just kind of want to cover these in our diary to make sure that everybody understands the color codes here, understands when we do close out a trade, we lock it out at that particular gain or loss. And so what we'll see here is how much gains over the coming weeks with our particular swing trades will help us where we put our protective stops, how fast we can get to break even plus dinner for two. Very powerful thing when we have such volatility in the markets like yesterday evening. All right, so this is the spreadsheet. This is our diary explained, and if you have any questions on that, the Campfire forum that is listed Forex, and if you have any questions on this diary and all that, please don't hesitate to post them. Happy trading, everybody.